it's only about 40 billion of the money that we're raising that we're using to support international expansion in the immediate term. We still have room from our existing capital of doing about another 30 billion or so of our existing capital to support international expansion based on the limits that CBN has set. So in actual fact, of the 160 billion naira that we're raising now, only about 40 billion of it will go towards international subsidiaries. But as I said, we will be opening new subsidiaries. Basically, the target is one a year over the next 5 years, and we're working hard to see how we make that a reality. But beyond the investment in subsidiaries, our capital adequacy ratio will rise, and it will allow us to continue driving our lending program. As I mentioned, for us, being an inclusive, fostering inclusive and sustainable growth is a core part of what we do. So our high yield retail and SME lending, where we generate about 40% return overall, some businesses are higher than that, other segments are lower than that, and other products are lower than that. We expect that will grow significantly over the next few years. So quite a bit of our capital will go towards supporting that. Then we expect that sectors like infrastructure will be key for Nigeria over the next few years. And we intend to play significantly in the infrastructure space. Of course, there's power, but equally importantly, there's transportation and others. And we would be continuing to play heavily in supporting the expansion of infrastructure in Nigeria. Then there are sectors like non-oil exports and exports generally, where we have a very strong structured export finance capability, both for hard currency lending, which happens in the oil sector, and local currency, to some extent we do with the soft commodities that we export as a country. So we expect to see significant support to those sectors. So lending will be a big part of where this goes towards, because we will need more capital to support our capital adequacy ratio. And the third area will be human capacity. We're going to be investing heavily in making sure that we have the right human capacity to drive the very ambitious growth that we have. And last but not least is technology, which is key to the growth of the organization. And I believe that is what the use of proceeds sort of indicates in the offered documents. But those are the areas that we'll be putting this money towards. And how does that support our strategy? I think you will see a much more profitable, much more efficient, and much more impactful organization whose footprint will now go beyond this country and be able to bring the same impactful financial services to more countries on the continent, but always keeping Nigeria at the heart of what we're doing. The sectors that the funds will be directed, I've just indicated. And how will this strengthen our balance sheet? It will take our capital adequacy ratio well north of 20%. And we believe with the return on equity that we'll be delivering going forward, we will stay at those sort of levels, going forward. Ultimately, I think what that'll do is in the medium term, we expect that we will see an even higher risk rating than the already investment grade that we have.